This evening from the RBI. We are not cutting rates, but banks can. In a surprising decision, the Monetary Policy Committee left key policy rates unchanged. So all 6 members of the committee voted in favor of that status quo. Here are the key highlights from there. So the repo rate remains unchanged at 6.25%. But in a significant move, the RBI has changed its monetary policy stance from accommodative to neutral. Now, central bank believes that it is shifting to a slightly hawkish stance, keeping in mind the transitory effects of demonetization on inflation. That was number one. Number two, RBI expects inflation to remain below 5% during January to March this year. However, it has stopped short of giving a timeline to achieve its goal of 4% inflation. It has also cut its forecast for growth this financial year to 6.9%. If you remember, the early expectation was of 7.4%. Now, the other key highlight from there, there will be no limit on cash withdrawal for saving accounts holders from the 13th of March. So currently that limit is pegged at 24,000 rupees per week, which was imposed after demonetization. Now, that will be increased to 50,000 rupees from the 20th of February till the 12th of March. And finally, the governor has nudged banks to cut lending rates. He believes that there's more room for transmission. Urjit Patel also saying that the RBI has cut the repo rate by 175 basis points over the last few months, but banks have cut lending rates by just 85 to 90 basis points. Here's the top brass at the RBI on the key decisions that were taken today and the implications.
The committee was fully cognizant of the lags through which monetary policy typically operates. It was also sensitive to the need for a calibrated approach to the target, thereby minimizing the collateral costs of achieving it. Therefore, it decided to shift the stance of monetary policy from accommodative to neutral to give us sufficient flexibility to move in either direction. There is still scope for the lending rates to come down because our policy rate came down by 175 basis points, and the weighted average lending rate has come down at most by about 85-90 basis points. So I think there is scope for some more transmission. For some borrowers, the healthy borrowers, sound borrowers for housing finance, etc., they've already benefited.
We set out our range, 1.25 to 1.75, and stays there. And if you make your calculations, taking any risk-free rate and the forward inflation rate, you will come into that range.
Effective from 20th February 2017, the limits on cash withdrawals from the savings bank accounts will be enhanced to rupees 50,000 per week from the current limit of 24,000 rupees per week. Effective from 13th March 2017, there will be no limits prescribed by the Reserve Bank on cash withdrawals from savings bank accounts.
I don't think a bad bank just by itself will necessarily work. I think it has to be designed right. The big piece of the problem is, can you get the bank to sell the assets at the right price to ARCs and private investors who want to come in? How to get that right price to come in using a portfolio or a bad bank kind of approach, I think that's going to be key. We're going to be thinking about what kind of design issues might help with that, but we think it is something that, if designed properly, could help.
Right, so that's the commentary coming in from the